The year 2025 is set to be a crucial one for AMD as it works to close the gap with its competitor, Nvidia. When it comes to semiconductor stocks, it's nearly impossible not to think of Nvidia. Over the past 2 years, Nvidia has established itself as the clear leader among chip companies. At the same time, it has quickly risen to the forefront of the artificial intelligence (AI) industry as a whole. However, I believe that investors have become so focused on Nvidia that they may be overlooking other opportunities in the semiconductor space. As 2024 draws to a close, I encourage investors to step back, take a broader view, and consider the hidden potential of other companies in this sector. In this context, I want to highlight why advanced micro devices (AMD) is an especially compelling investment opportunity at the moment. Could AMD become the Nvidia of 2025? I believe it has a real chance to do so. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. On the surface, it seems clear that Nvidia is far ahead of AMD in the AI race. Over the past 12 months, Nvidia has reported an impressive $113 billion in revenue, nearly 5 times more than AMD's revenue during the same period. However, when we examine where this revenue comes from, it might change your perspective on AMD's potential growth compared to its larger competitor. In the table, I have outlined the annual revenue growth rates for AMD's and Nvidia's respective data center divisions. Over the past year, Nvidia's data center business has slowed down significantly. Meanwhile, AMD's data center business has grown from virtually nothing to achieving a similar rate of growth as Nvidia. Now, don't get me wrong. I'm not suggesting that Nvidia is in trouble. It's difficult to argue against a company that's consistently delivering growth of over 100% every quarter. However, my main point is this: even though Nvidia is a bigger company than AMD, that doesn't automatically make it a better investment. In this discussion, I'll explain how AMD has successfully developed a strong and competitive data center business and why the year 2025 could be a pivotal moment for the company. Nvidia's significant growth in its data center business can largely be attributed to the fact that, until recently, the company faced virtually no competition in the graphics processing unit, or GPU market. However, with the successful launch of AMD's MI300 accelerator, Nvidia's first-mover advantage is finally encountering some challenges. You might argue that Nvidia's next-generation Blackwell GPU architecture will eliminate any possibility of AMD dethroning the leading chipmaker. But consider this: many of Nvidia's largest customers, including Microsoft and Meta Platforms, are already using AMD's MI300 GPUs. In addition, major tech companies such as Alphabet and Amazon, both of which are Nvidia customers, are making significant investments in developing their own in-house chips. These efforts aim to reduce their dependence on Nvidia and diversify their supply chains. Furthermore, AMD is not stopping with the MI300. The company is already working on a successor GPU called the MI325X, which is expected to launch in 2025. Beyond that, AMD's MI400 architecture is projected to debut in 2026. The takeaway: I don't view Nvidia's Blackwell launch as a serious threat to AMD. AMD is advancing its technology at an unprecedented pace, and with investment in artificial intelligence infrastructure expected to grow over the coming years, the MI325X and MI400 launches could serve as pivotal drivers, enabling AMD to gradually capture more market share from Nvidia. At the time of this writing, AMD is trading at a forward price to earnings (P